Welcome to the deep dive. Today, we're plunging into, well, one of the most audacious economic experiments happening right now.
You could definitely call it that. El Salvador.
Exactly. The first country ever to adopt Bitcoin as actual legal tender. And this isn't just, tracking some volatile asset online. We're talking about fundamentally reshaping a whole nation's financial system.
Absolutely. How people send money home, how they buy groceries. It touches everything.
So our mission today is to really dig into the sources we have, articles, government reports, academic studies. We want to understand El Salvador's unique Bitcoin bank idea, the one centered around their development bank, Bandesol.
Right.
We'll look at their big goals, how they actually tried to implement this radical vision, and what's happened on the ground. Think of this as your shortcut to getting what's really going on with this whole experiment.
And it really is an experiment worth watching. September 7th, 2021, that's the date history was made. Bitcoin alongside the US dollar, officially. But it's crucial to get this part right about Bandesol, their development bank. They might call it a Bitcoin bank, but it's not like your corner bank where you go deposit crypto.
Ah, okay. So it's different.
Very different. Bandesol was picked to be the main player for holding digital assets for the state, managing the government's Bitcoin investments, and importantly, using blockchain to try and boost financial inclusion. It's a real hybrid model. Nothing quite like it anywhere else.
So when we say a country goes all in on Bitcoin, what does that actually look like on the ground? It's more than just a law, right? It must signal this huge shift in money policy.
Oh, definitely. It potentially changes everything, how people save, how they spend, how the country even deals with, the global financial system.
What were the big promises that pushed them to take such a massive step? And let's be real, what unexpected problems have cropped up? We're going to unpack all of that. Okay, let's really get into it. Why? Why would a country, especially one already using the US dollar, jump into something so unknown like Bitcoin? And practically, how did they even start making it legal tender nationwide?
Well, the legal backbone was this thing called the Ley Bitcoin. That's Legislative Decree number 57, passed back on June 8th, 2021. And it was pretty clear. It said Bitcoin would have, and I'm quoting here, free circulation with unlimited liberating power in any transaction.
Unlimited liberating power. Wow, okay, so it wasn't optional.
Not at all. It was the law. And a really key part was Article 8 that created something called the Bitcoin Trust. This trust, managed by Bandel's, got a starting fund of $150 million.
$150 million. That's a serious amount of money, especially for El Salvador. What was the main job of this Bitcoin Trust? Just hold Bitcoin, or was there more to it?
Oh, definitely more strategic. It had two main jobs, really. First, it was there to back automatic Bitcoin to dollar conversions, to make sure there was liquidity.
So if a shop owner got paid in Bitcoin but wanted dollars right away?
Exactly. The trust made that smooth. Second, and this is crucial, it was designed to help absorb some of the risk from Bitcoin's price swings. The volatility.
The users and the government itself.
Yes, to kind of cushion the blow of that volatility.
That's pretty incredible. Bandesol, this development bank from way back in '91, suddenly managing crypto assets and a volatility fund. And here's where it gets really interesting. Based on the sources, they didn't just, flip the switch and hope. They laid out these incredibly ambitious, detailed goals, almost like a corporate plan, but for a country's Bitcoin strategy.
Precisely. The sources talk about three big meta goals. Their short-term meta, that was for 2021 to 2023, was all about getting the basic plumbing in place. Launching the Chivo wallet, putting Bitcoin ATMs everywhere, setting up that state fund for volatility losses. Just the basics.
Right, the foundation.
Then the medium-term meta for 2024 to 2026 gets much bolder. They're aiming for 40% daily Bitcoin used by people. 40%.
Wow.
And cutting remittance costs by 30%, plus pulling in foreign investment, specifically the kind linked to blockchain tech.
40% daily adoption is a huge jump. And yeah, cutting remittance fees by a third would be massive for families there. What about the really long view?
Well, their long-term meta, looking out to 2027, 2030, is pretty visionary. They want to position El Salvador as a global hub for crypto innovation, build a whole self-sustaining ecosystem where Bitcoin is just a normal, stable part of the national financial system, full integration.
That is an incredibly ambitious plan. Clear targets for tech, for adoption, for the economy. But, setting goals is one thing. How did the tech actually roll out? And what did ordinary people think when this all started? So the government rolled out the Chivo wallet. For lots of Salvadorans, this was probably their first real interaction with crypto. What was that like? And what did they do to get people to actually, download and use it?
Yeah, the Chivo wallet was definitely the main event. Developed by Athena Bitcoin, and the state put over $200 million into it. Key things were over 200 Bitcoin ATMs installed pretty quickly in 2021. But the real hook was that $30 Bitcoin bonus. Free money, basically, for signing up.
$30 in Bitcoin?
Yep. Plus, no fees for swapping between Bitcoin and US dollars right in the wallet.
You can imagine the buzz when that $30 bonus landed. Like a digital handshake from the government, right? An immediate benefit you could see. The $30 bonus, I mean, that sounds like a really powerful way to get people curious, at least.
Yeah.
But did that initial buzz last? Did people keep using it, or was it mostly just grabbing the free $30?
Well, that's where we hit a bit of a reality check. There was a 2022 study from UC Berkeley that had some, let's say, sobering numbers. It found that while, a huge chunk, about 70% of people downloaded the Chiva wallet initially.
70%, that's huge uptake.
It was huge. But fast forward just 6 months, and only about 20% were still using it regularly.
Wow, from 70 down to 20, that's a massive drop-off.
It is. A big gap between downloading the app and actually making it part of your daily routine.
What went wrong? The study mentioned things like lack of trust, technical glitches, and obviously the volatility.
Right. And those aren't small things. Lack of trust, for instance. In a country with a history of economic ups and downs, people are naturally wary of new government financial systems, especially one that's unfamiliar.
It makes sense.
And the technical problems weren't just minor annoyances. We're talking reports of transactions failing, funds getting frozen, even accounts being cloned.
Oh, wow.
Yeah, stuff like that really kills trust, especially when it's your money.
So that dream of a smooth digital economy kind of crashed into the wall of, well, economic anxiety and tech issues. That's a tough lesson. But okay, despite those early bumps and the challenge of getting widespread use, did anything positive come out of it? Were there any tangible wins? Okay, remittances. This was a huge selling point, right? Reducing the cost. El Salvador depends so much on money sent home from abroad, like, what, 24% of its GDP?
Yeah, around that much.
It's massive. So did Bitcoin actually make it cheaper for families?
That was definitely the hope. The data, though, it paints kind of a mixed picture. The World Bank says direct Bitcoin use for remittances is still pretty small, less than 5% of the total.
Less than 5%.
Okay, however, and this is interesting, platforms that use Bitcoin's Lightning Network, like Strike, for example, they have shown they can slash costs dramatically. We're talking fees going from maybe 7% down to just 1%.
From 7% to 1%, that's huge savings for the people using it.
Exactly. So for the small number who are using these platforms, the savings are real and significant. The potential is there. It's just not widespread yet.
Okay, so a clear win for some, if not for everyone yet. What about other economic benefits? Tourism, investment.
Yeah, on those fronts, the picture looks a bit brighter, actually. El Salvador saw a 30% jump in what they called crypto investor tourism in 2022, so it attracted a specific crowd.
A new niche market.
Right. And maybe more importantly, big names in the blockchain space, like Blockstream and Chainlink. They've set up shop there. That suggests it is drawing in some real foreign direct investment related to blockchain.
That's definitely interesting. Attracting innovators, attracting capital, that's a tangible plus. But let's zoom out again. What about the government's own Bitcoin stash? How much are they holding, and what does that mean financially for the country?
Right. The government's own holdings are a big part of the story. As of May 2024, the sources say they hold 2,381 Bitcoins. At today's prices, that's roughly $150 million. But here's the kicker. The sources also estimate paper losses of around $60 million based on what they originally paid for them. $60 million in paper losses. That sounds like a lot for a national treasury. What does it even mean for a government to hold an asset that swings up and down so much? How do they square that with, being fiscally responsible? That's the multi-million-dollar question, isn't it? These aren't just numbers on a spreadsheet. Holding such a volatile asset with state funds, it really raises fundamental questions about managing public money. It's very different from traditional treasury practices.
And the government calls it a long-term investment.
They do. They consistently frame it that way, saying they're not worried about the short-term price dips. But it still represents a big risk, a kind of sovereign financial gamble that very few other countries are taking. And of course, it affects public trust and how people see the government's financial management.
Right, it's not just the money, it's the message it sends. Okay, so beyond the price swings and these paper losses, what other big challenges, technical, legal, social, has El Salvador run into?
Well, the sources highlight quite a few hurdles beyond just the price. First, volatility obviously remains a constant shadow. It's a genuine risk to public finances and the stability of that Bitcoin trust we talked about. Second, there are pretty significant regulatory gaps. Well, the light Bitcoin, the main law, it's quite broad. It doesn't really get into the nitty-gritty of things like anti-money laundering rules, or AML-CFT as it's known, or consumer protection, or even how capital gains on Bitcoin should be taxed. Those specifics are missing.
And without those clear rules, does that cause problems internationally?
Oh yeah, big organizations like the IMF back in 2023 and the Financial Action Task Force, GFI, they've warned El Salvador. They're worried about risks like money laundering and are pushing them to get their rules in line with global standards.
Okay, so international pressure. What about problems closer to home?
Well, cybersecurity and fraud have definitely been issues. The Chivo wallet itself has faced attacks, and there were reports of accounts being cloned. Security is an ongoing battle.
And the overall financial picture, the cost of all this.
That leads to fiscal sustainability concerns. The whole Bitcoin strategy, the initial investment was over $400 million. And it's not yet clear what the return on that investment is, raising questions about whether it's financially viable long-term and, frankly, about transparency.
$400 million is a huge investment.
It is. And finally, you have the education and trust issue. Despite government efforts, a 2023 study found only about 35% of adults really grasp the basics of Bitcoin.
Yeah.
There's still cultural resistance, distrust of digital systems, especially outside the cities. It's a complex mix.
So you've got this grand vision hitting these very real roadblocks: market swings, missing rules, security worries, cost concerns, and a public that's still learning and maybe skeptical. Where does that leave El Salvador's Bitcoin plan? What are the experts suggesting to make this whole thing, well, work better?
Looking at the sources, the recommendations are pretty concrete and aim to address those exact issues. First off, there's a very strong push for a comprehensive digital assets law, something that fills those gaps. AML-CFT rules, clear tax guidelines, strong consumer protection, maybe even rules for issuing state-backed stablecoins.
Stablecoins, like a digital dollar.
Potentially, yes.
Yeah.
We'll come back to that. Second, to tackle the transparency issue, the recommendation is for transparent audits. Think independent, regular audits, maybe twice a year, of the Bitcoin Trust. And here's the cool part. Publish the results in real time on a blockchain.
Using blockchain for transparency. That's clever. Makes sense. What about getting people more comfortable with it, the education piece?
Exactly. The suggestion is education partnerships. Get universities, NGOs involved in rolling out broad financial and digital literacy programs across the country. And, linked to the stablecoin idea earlier, one recommendation is to actually create a national stablecoin. Maybe call it an e-dollar, pegged one-to-one with the US dollar.
So people could use that for daily stuff without worrying about Bitcoin's price jumping around.
Precisely. It could offer a stable digital option for everyday commerce, reducing that volatility risk for ordinary transactions.
That seems practical. Anything else on the list?
Yeah. A couple more things. Offering fiscal incentives, tax breaks, maybe for blockchain companies that actually create local jobs and share their tech know-how. Make the investment benefit El Salvador more directly.
Attract investment, but make sure it helps locally.
Got it. And finally, citizen participation. Bring the public into the conversation about how this whole Bitcoin ecosystem is governed. Use forums, consultations, make people feel involved.
Build that trust from the ground up.
Exactly.
You know, these recommendations really drive home a key point, don't they? It's not enough just to adopt a technology. You have to build this whole supporting structure around it. The laws, the education, the security, public buy-in, the whole ecosystem. This deep dive really shows that El Salvador's Bitcoin bank, Bandesel, it's way more than just a bank. It's this, truly unprecedented global experiment in socioeconomics, right?
Yeah.
Pushing the limits of digital currency for a whole nation.
Absolutely unprecedented.
Yeah.
And look, it gets plenty of criticism, the cost, the volatility risk, the fact that real daily adoption is still pretty low in many areas. Those are valid points. But on the other side, it has brought some tangible benefits. We saw the reduced remittance costs for some users. It has attracted that niche tech investment and tourism. And it is undeniably pushing the envelope on financial inclusion for people who are outside the traditional banking system. That model, a development bank managing crypto assets and promoting adoption, it's genuinely unique.
And its long-term success, as we've laid out, really seems to hang on getting several things right. Solid regulations, much better financial education across the board, figuring out how to manage that wild volatility, and being really transparent about how it's all governed.
Definitely. And the final verdict on whether this experiment succeeds or fails, that won't come anytime soon. We're talking decades probably to really see the full impact. But whatever happens, El Salvador has definitely etched its name into the history books on the evolution of money and what role the state might play in this new digital age. It's a chapter everyone's watching.
So here's something to think about. If one small nation can make such a bold, maybe even risky move with a completely new form of money, hoping to reshape its future, what does that tell us about the power of innovation to shake up entire economies? And maybe more personally, what could it mean for your own understanding of what money even is or could be in the years ahead? Definitely something worth mulling over.